and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear.
Hi everybody. Good evening. Good evening. All right, let's get started here, folks. All right, how you doing? It is Sunday night, November the 16th. I'm just checking to see all these people come on online here. A lot of people still joining in here. Good evening, everybody. Welcome. All right. Okay, let's get started. I think I got to hit this one button right here. We should be all good to go. Here we go. All right, good evening, everybody, and welcome to DayTradeSPY.com's Week in Review. My name is Hugh, along with just myself. We're doing this solo. All right, might have John, my good friend John Johnson. He might chime in a little later on. We'll see what happens. But good evening, everybody, and welcome. It is Sunday, November the 16th, 2025, and I'm just going to put this up there for a few seconds, let you read this. All right, this is the standard disclaimer. Keeps us out of trouble. At least that's what they say. Don't forget, of course, you alone are responsible for all your own trading, and past performance does not guarantee future results. All that said, good trading, everybody. All right, there I is. Good to see you all. Casual Sunday. That's what it is. It's casual Sunday. I left my tie at home. Anyway, it's, folks, questions box. You'll find the icon on your Zoom dashboard. Click on that. I am the only one that sees that, so go ahead and ask whatever you want. All right, got a few comments already coming in, so good to see that. All right, if this is your first time, let us know that too. Just get to see that, get to know if you're here for the first time, and just want to sort of send out a special welcome to you all on that. And let's move along here. Okay, just want to introduce myself. My name is Hugh. All right, and my associate, his name is John. He's not here tonight. As I mentioned, he might stop in there a little bit later on, but for those of you who don't know, I've learned most of what I know from deep in the trenches, folks. That's really where you learn this material. I think at the end of the day, the battleground just happens to be the stock market, but the real battle is between the person in the mirror. And when I finally realized that and recognized that, and I started, okay, you know, I got to battle those emotions, right? Once I mastered that, then I started making some real money, and that's what we do. We teach you. We teach everything we learn in the deep in the trenches. We trade what we teach, teach what we trade, and I've been doing this teaching internationally since 2010. We're now in our what's that, our 17th year here right now, you know, and looking for short-term breakout trades for small, multiple gains every day. That's kind of what we do. My buddy John, turned out he was a litigation lawyer a long time ago. He was in the oil and gas industry in Texas as a lawyer. But he started doing the same thing I did. Yeah, made some money on the stock market, and people started asking him questions. How do you do this? Before I know it, he started turning to trading and trading and training other people how to do it as well. And it's really kind of cool because we come from different directions, different angles in what we do. And several years ago, Eagle Financial Products discovered us. They bought us out, hired us back. They brought on John. Together, we make a great pair. Let me tell you, it's we got a little motto. It says, when our indicators unite, our trades ignite." Can't be truer. Truer words have never been spoken. So that's what we do. We love to teach, and we've got some pretty cool little strategies that we teach, and works for us. Not saying it's going to work for you, but so far it's been working for us pretty good, and we're doing very well with it. So, all right. So tonight, what we're going to talk about, we're going to review last week, take a look at next week. Get ready for the 5 to 50K challenge. I mentioned that several weeks ago. Just going to bring that up to speed a little bit here. I'm going to go back in the cornfield. It is the fall, the autumn right here. And talk about your challenges, give you a little 2-minute tutorial, show you how we can help you and answer your questions. We got a little contest at the end as well. Stick around. You could be the winner of a fine ebook. All right. All right. So just a reminder, Spy in the Market. This is a weekly newsletter that goes out. If you haven't yet subscribed, do so. Go to our website, DayTradeSPY.com. When the little pop-up comes up at the beginning, just leave us your email address. That'll get you on the email list. And every week we have a different topic. This week it's going to be your friends looking to borrow the money to trade. We'll tell you what to do. Okay. I'll tell you what to do when your friend sees how much money you are making and they say, "Oh, Hugh, can you just lend me $10,000, $20,000? I want to do this too." We'll tell you what to do. All right. All right. Taking a look at the week in review. Let's take a look and expand this little chart here. This here is the daily chart of last week and see what happens. What happened on Monday, the markets closed a little bit higher as lawmakers took critical steps to end the historic government shutdown. They said, that's enough. 42, 43 days, we're done. Well, John and I, we had 8 wins and no losses, no holdovers, nothing like that. On Tuesday, we had concerns over the labor market. That dipped markets a little bit there in pre-market and see a little bit into the day as we're coming down a little bit. However, S&P 500 ticked a little bit higher as hopes of ending the government shutdown came back into focus. 6 wins on Tuesday. On Wednesday, shutdown is here. The end is here. The end of the shutdown is here. S&P lagged a little bit to the Dow, weighed in heavy by the tech sector, big techs. They had the tech sector is overvalued. Some value came out of that, brought down the whole S&P 500. So here's the thing with the S&P 500. The top 10 stocks, they weigh very heavily on the S&P 500. Valuations, roughly 40% of the entire S&P 500 valuations. That's very heavy. So when they shake, right, the whole S&P is going to be affected by it. Also, we had some concerns with AI, artificial intelligence. 4 wins, 1 hold, 1 loss. I should probably fix this here. We did have 1 hold on that day. Let me go back and correct that. 1 hold, 1 loss on Wednesday. Thursday, we had a bit of a meltdown here. Steep losses in Nvidia and other heavyweights in AI, as well as inflation and interest rate cut worries, scaled back SPY, dropping 13 points. We had 7 wins, 1 hold. What happened was a lot of the Fed members are now on the speaking trail, right? And we didn't have any economic news coming out of the Feds. They're not really sure what to do. Last time Fed Chair Jerome Powell spoke, he said it's not a foregone conclusion about December. A lot of the Fed members are concerned about the labor market and inflation. So now it's pretty well split as to whether they should whether they should lower or hold interest rates for December. On Friday, the market dipped in pre-market, even went lower, but technical indicators saw, hey, wait a second, we're at 664, 665. We are getting into the buying mode, and the stock market started to go back up again, erased at least a lot of the pre-market losses, and tried to get back up and recover some of the losses on Thursday, but couldn't quite make it. We had some pretty good resistance at that 675 level, and the market came back down here. But technically, we did recover some of it. And again, the market ended up muted on the week as mixed Fed's opinions braced for a likely no rate cut. And I do want to fix one little thing here. I want to get rid of a space on that one. There we go. Let's go back to that. There we go. There's a space in there. So we had 7 wins, 1 holdover on Friday. Week in review, 43-day government shutdown ended with funding still okay until the end of January 2026. Then we're going to do it all over again. Okay. So if you're a federal employee, you'll want to save, right? no Christmas for you. You're going to want to stay because just in case there's another shutdown, we'll see if we break the record in January, right when all the Christmas bills come in, right? Couldn't come at a worse time. Anyway, federal workers are going to receive their back pay, and SNAP is restored. Tech and AI underperforming after a strong rally since April. We're seeing some struggles there, and the mega caps face challenges from rising debt levels. However, economic growth is expected to soften into Q4, rebound in next year, rebound in 2026. Okay. Here's a look at the chart. Probability of a rate cut at the Fed's December meeting came down to about 51%. About a month or so ago, it was almost a foregone conclusion until Fed Chair Powell says, it's not a foregone conclusion. Right now, the Fed members are about 50-50 as to whether there's going to be a rate cut or not. They are concerned, again, about the labor market mostly and also interest rates. It's not at that 2% level yet that they're expecting. So that's kind of where they're looking at right now. So here's what happened on the market overall last week. S&P rose 0.1%. We're looking year to date, 14.5. NASDAQ dropped 0.5%. They're still leading the pack at 18.6% year to date. And the Dow was just kind of just lagging along, 10.8% year to date. They rose 0.3% over the week last week. So here's a look at the seasonal charts. Seasonal charts, the blue line is the current SPY price. Red line is the average of the last 5 years daily close. And here's a look at what happened last week. We actually rose about 9 points overall last week. This is on average, okay? Not what really happened last week, but this is on average. And historically, seasonally, SPY stayed flat the following week. So this last week might have been a little ahead of the game because we were basically flat this last week in reality, all right? So that's what happened. All right, looking at the week ahead, we've got the Empire State Manufacturing Index coming up on Monday. No news day on Tuesday scheduled. Fed meeting minutes issued on Wednesday. Now, again, what happens is there's no Fed news. It's just that they're going to dissect the reasoning behind why the decisions were what they were the last time. And that report is coming out on Wednesday. On Thursday, we've got scheduled unemployment claims, the Philly Fed Manufacturing Index unemployment rate, hourly earnings, non-farm employment change, and existing home sales. A lot of news scheduled for Thursday. Not really sure how relevant it's all going to be because they're playing catch up here. Some Fed members said they're going to issue September's results and that we might not even see October's results. So we're going to wait and see what happens. Hopefully they'll get caught up and give us all the relevant data so that the Fed can make an educated, intelligent decision on whether to lower interest rates or hold them. On Friday, we've got the S&P Global Manufacturing PMI report, also the S&P Global Services PMI report coming up on Friday. We have a consumer sentiment report as well as inflation expectations. That is coming out on Friday. All right, so week ahead, as far as volatility is concerned, we figure it's going to be medium on Monday, low on Tuesday, medium on Wednesday, and high Thursday and Friday. Now, why does this matter? Well, you have to adjust your expectations accordingly. So if the volatility is low, maybe instead of expecting 6, 7, 8, 10%, scale it back a little bit, 3, 4, 5%. You know, if you're looking for a percentage gain, now personally I like to scalp my trades. So instead of maybe looking for 10, 20 cents, I might scale it back to 5 or 6 cents on the trade, right? So what happens when volatility is low? You don't get as much movement on the options. On the other hand, the options cost less money. When volatility is high, the options are expensive. You know, you're going to pay a lot more money now. As long as they maintain the volatility, you're going to get the money back when you go to sell it, which is why you don't like to stay in the trade very long. I don't want to be in there while they're, adjusting the volatility, if you know what I'm saying. You don't want to buy into high volatility, and then when what happens when they bring the volatility down, there goes the premium in your options. And that's what we trade, by the way, options, right? Stock options. As options on SPY. So it's kind of find that balance. It's a tough balance to find. The other day, our pick of the day actually it was a no trade day. The reason I think it was on Friday we had a no trade day because the volatility was way too high. We didn't want people buying early in the morning, first thing in the morning, into high volatility. And then when they suck the volatility out of it, an option you might have spent $7 on and suddenly is now worth $5 or $4. And that kind of sucks. You just lost $2, $3 there in that volatility squeeze, right? You don't want that. So these are the things you have to consider when you're trading options. My good friend Daphne, she says, "Come hither, trader. We're going to show you how to spot them, how to trade them. Many opportunities daily." There she is with the magnifying glass, looking for those opportunities. Kind of a cute gal when she's squinting her eyes like that. I don't know who comes up with these, but kind of like that. Folks, if you're not in the trading room, I suggest you join us. The reason is because we are going to start up our 5 to 50K challenge. It's not too early to join. I say that because if you're not in the trading room, that's where you're going to learn how to do it. All right. So you're going to want to, lots of time to get in, learn what we do some paper trades. All right. Get your questions answered. The longer you're in the trading room, the better your trader you're going to be. And we had noticed from experience that those people in the trading room that have been there for a long time, they're actually very good traders now. I don't know what that magic number is. I can't say that, well, you have to be in there a month or 2 months or 2 weeks or something. That's not what I'm saying. You're not even going to realize, but suddenly, or not suddenly, but eventually, you're going to start having good trades, one after the other, after the other, after the other. And even when the trade turns against you, you're not going to panic. You're not going to panic and necessarily sell right away. You're not going to, oh my gosh, going to jump off a bridge. Nothing like that at all, right? Sometimes people say in the trading room, how come you guys can be so composed? You're in a bad trade. It's going against you. How come you're not panicking? Well, experience tells us that markets go up and they go down and they go down and then they come back up. Just like I showed you in the charts earlier on Thursday, we had pretty well a collapse. Pre-market, it came down again Friday and early morning trading, but let's just hold on. We like to see where the market is going, not where it is or where it's been. We like to see, we like to anticipate where it's going. All right, not always easy, but we got pretty good at it. Now, I'm going to be honest with you, we don't know where the market's going to be a year from now or 6 months from now or even a week from now. We have no idea where the market's going to go. But we got a pretty good idea where it's going to go later today. So for that reason, we are able to um, make some pretty good predictions. So, all right, now join the trading room. You can go on our website, and I think they charge, I don't know, a lot of money. I forgot what they charge. So the thing to do is this: contact customer service at daytradespy.com. You're going to get the best deals there. All right, tell them you're interested in getting into the trading room, and they're going to contact you now. To be honest, they get swamped with lots of emails. There are many, many, thousands and thousands of people that they serve. So if they don't get back to you right away, don't panic. Give them a day or two. Somebody even said sometimes it takes them 3 days to get back, which I don't think is great. But just hold on; they will get back to you, and join the trading room. All right. 5 to 50K challenge. Now, last time we did it earlier this year. We started this in January the 6th, started with $5,000. We cranked that up into $50,000 by the middle of September, and we aim to do it again in 2026. And we do this, by the way, live in the trading room. That's how we do it. It's all in the trading room. So you see everything that we are trading. We're going to go over the rules, everything else in the trading room. All right. Trading room, that's kind of where it happens. Here's what we do, folks. This is how we're going to make it work. It's hosted by myself along with John. Combined, we have over 45 years market experience. The trading room, yeah, you hear me talking a lot about it. It's an interactive session, a lot like this, fully narrated. Learn and earn. It is recorded. So if you miss it, or even if you don't miss it, you want to go back and hear a certain segment, write down the time, go back and listen to the recording. The recording is put up fairly soon after the session is over. Okay. You can ask questions, just like on this line right here. You can ask questions and you get your questions answered. So it's actually pretty good. This is where our strategies come alive. 9:20 to 10:30 Eastern Time every morning. Okay. So we have various strategies. And again, our highly acclaimed 5 to 50K challenge is going to be in the trading room. And the cost, if you go to customer service at DayTradeSPY, I believe is $6.99 a quarter. When I look at that, 700 divided by, what's that, 3 months, $233 a month divided by, say, 4.3. You're talking about $54 a week. Divide that by five, you're talking about $11 a day. I don't even think it buys you lunch. Okay, that's not even lunch. Um, it might get you a cheeseburger, a medium fries, and a Coke at McDonald's. Okay, for one of us, either John or myself. So all we're asking is you buy one of us lunch, and you're going to have the services of two expert professional traders. I say that lightly, but that's what we do. This is not a part-time thing. It's not a hobby for us. This is what we do, and we're going to teach you everything we do to make some pretty serious money on the stock market, the trading room. All right, pretty cool place to be. We also have other services for those perhaps unable to join us in the trading room. If you just want to be given a trade, we actually have the Day Trade Spy signal. This is a particular option that is sent to your cell phone 3 to 5 times a week in the morning, algo based, right? Algorithm based. So when a certain setup happens, it triggers the trade, and then it's sent down to your cell phone. It's in the mornings, and it's an immediate buy. You put it up for sale for 5% profit target. If not so, by the end of the day, sell it for the market close. There is ample time in that. If you do want to hold overnight, chances are you're going to be okay with it. But the program does call for a sale at the end of the day. And statistically, it works out very, very well. Okay. Not all trades are going to be winners. Not going to kid you on that, but by far and large, they mostly are. And the ones that are not, you're going to have some small loss, but it's not a total loss. Not like a total loss. So always, whenever you get into these trades, doesn't matter what trade, doesn't matter how sure you are of the trade, never, ever, ever invest more than you can afford to lose. Okay. I tell people this, even if you had $1 million hanging out of your back pocket, don't go stupid. All right. There's no guarantees on anything. If you had, and here's the thing, I even had a newsletter written several weeks ago about this. It was, I forget what it was entitled. It was something like, it was about money management. You know, it was about goodwill in trading. There's no such thing as goodwill in trading. By that I mean, you go to a restaurant that's been there forever, very well uh, established restaurant. They've got great food, great service, great everything. And if you have say a bad meal, let's say your steak is undercooked, um, call the waiter back and say, can you put this back on the grill or something. They take it away and bring you back another one. You know, that's not going to destroy the restaurant. The restaurant has this thing called goodwill. It's been there forever, and it's always full. There's a lot of goodwill in that restaurant. So one bad meal is not going to destroy them. However, with trading, there is no such thing in this business as goodwill. You can have 1,000, 10,000 great trades behind you. That does not guarantee your next trade is going to be good. So if you go crazy and put $1,000 or not 1,000, 1,000 contracts, you're going to buy 1,000 contracts on this spot. There's no guarantee it's going to go in your direction. The market is the market, and it's going to mind of its own. And it's going to go wherever it goes. All right. So unless you are the market maker, and you'll need millions and millions of dollars to be on the market making side of SPY, you're up against the big boys. Probably not going to happen. Always practice good money management, right? A couple of weeks ago, some people did lose some money and felt bad for them, but a lot of them recovered. And, we talked about the money management, and it's very important. So, anyway, that's one aspect of having the option picked for you. And the nice thing about the signal is that you can actually go about your day in the morning. If you've got something to do in the morning, you can't be in front of your computer. it's okay. But as long as you've got your cell phone with you and you've got your trading platform loaded up, that you can just stop what you're doing and get on there and fire up your platform and place a trade, you should be okay. All right. We also have another one called the pick of the day. Now, this is a little bit different. This is a particular option that is emailed to you at 9 o'clock in the morning, 5 days a week, to be traded right at the morning opening bell. So the difference is the signal could be any time in the morning based on an algorithm. And the pick of the day is actually an option trade that is picked by John and myself. We get together before the market open and we determine, is the market propensity to the upside or to the downside? How strong is it? What are the risks? And we pick a particular option that you would buy right at the opening bell. Now, if let's say the option is a call option, and right at the opening bell, you go to your 1 minute chart, and if the pressure is to the upside, you buy it right away. If the pressure is to the downside, hold on until it reverses, then get into it. You'll get it for a little cheaper price, and buy it then, and immediately put up for sale for a 6% profit target. Walk away and come back later, and money's usually in your account. Now, these options may be held overnight. However, for reporting purposes, what we do is we have to sell it by the end of the day. So sometimes because of that, we have to we have to identify a loss, even though in reality it's not a loss because we see that, okay, it's struggling along right now, but it should be fine tomorrow. Tomorrow comes, the thing gaps in our favor, and we make a lot of money. All right, so I want to tell you that. All right. All right, there's a question on, let me go back to this here. They put up for sale, maybe held overnight. Again, contact customer service at DayTradeSPY. I should actually mention to you that there's a question here. Is there a trial period to the trading room? It's not really a trial period. There is and there isn't. So you buy the service, and this goes for all the services, and you have 30 days. If you don't like it, you simply contact customer service and tell them, I don't like the trading room. It's not for me. You don't even need a reason, nothing like that. You just say, I don't like it. It's not my cup of tea. I'm going to cancel. And guess what? They give you all your money back. So the long answer, yeah, there is a trial period. You got a 30-day money back guarantee. All right. So you actually pay for it first, then you say, then you can cancel. All right. You can cancel. So that's kind of the way it is. And that's for all the services. So, all right. And that's actually pretty cool. Next up is the inner circle. Now, this is something that started back in 2010. And the funny thing is, when I started trading, actually, I'm going to tell you something. This whole business, Day Trade Spy, started by accident, if you can believe it. Our intent was never to do this. I mean, we're making money ourselves, trading, my friends and myself, and, we're just, hammering out good trades and making some money. In fact, my friends and neighbors and everybody thought that I struck I hit a lottery or something. Or asked him, well, what lottery did you buy? You want to buy my tickets for? He said, no lottery. Well, what are you doing, Hugh? So I told him. I said, well, I'm trading options. I trade options. In fact, I only trade options on one stock, SPY. That's the S&P 500. Essentially, determine where the economy goes and follow along. And they coerced me. They said, well, can you show us? Just get a website. Just put your trades up on the website in the morning as to what you're looking to trade. Can you just do that? So okay, fine. So we started that, and they said, well, can you teach us? Can you teach us? And they started throwing money at me. Oh, okay, well, so we put up this website and we started this inner circle and we started the trading room and threw some ebooks out there, different things and training courses and whatnot. And we thought, well, yeah, this will last a month or two. It'll fizzle out. Well, instead of fizzling out, the thing grew and grew and grew, and oh my gosh, okay, it mushroomed. And here we are, 16, 17 years later, it's bigger than ever, and a lot of people are online. And so the trading room, the inner circle is what was the first thing that started. So we started posting our assessment of the market as to the way we see the day unfolding, right? We look at the news, we look at the technicals, and we look at We look at all the various inputs that make up what we're looking to trade. All right, we're looking at all the various inputs. Um, Twitter feeds, oh sorry, X feeds, Truth Social, all of that stuff, all the news. We have various news feeds that we examine and we look at the charts, right? Look at the charts, fundamentals, technicals, market sentiment, all of that stuff. Throw it all into a blender and then come out. Is the market going to go up or is it going to go down? Okay. And John writes this every morning actually, and he releases it at 9 o'clock. There's also a follow-up report later in the day as to what we actually did. All right, and that's actually usually a pretty brief report. Although John, he likes to talk more about it, so he'll expand on it. I like to be brief. I like to be brief. I like to make a long story short. He likes to make a short story long, but it works well. A lot of people like one, some like the other. So and it's actually pretty good. Also, as part of the inner circle, you're going to be invited to our weekly meetups. That's Wednesday nights at 8 o'clock. And these are actually recorded and for later review. In fact, I am going to put this weekly nights record. I thought I had that up there, recorded. Okay, reordered. No, recorded. There we go. There we go. Let's get that up there. All right. These are recorded. Because what happens is a lot of people overseas, it might be 3 in the morning when the inner circle meetup is, well, they're sleeping, right? So they get up in the morning, the recording is in their inbox, they listen to that, watch that, and John gets into that, and he usually has a topic that he talks about every session as well. So he runs the Wednesday night sessions, I run the Sunday night sessions. So. All right. Actually, the inner circle is actually the most affordable way to get started. I don't have the numbers handy. It tends to change a lot. Um, I want to say $79 a quarter. I'm not really sure. It's not expensive, folks. I'm not going to kid you. Contact customer service at daytradespy.com. Tell them you're interested in the inner circle. What's the best deal they can come up with? They're going to get back to you. And this is something you should be in, regardless of whether you're a newbie. If you've never traded anything in your life, you're going to learn a lot of stuff, a lot of great stuff. Or if you're an experienced expert trader, right? Good place to be because you know why? We do the heavy lifting for you. You could get all this information yourselves and spend a lot of time, assessing it, trying to make sense of it all. And you might not even get all everything, right? Whereas John, he will do all this heavy lifting. He knows how to scour the news sources and interpret it in a way that is a benefit to you. So you'll probably want to get it on this one here. It's really a no-brainer. Again, contact customer service at DayTradeSPY. All right, so let's go into some questions here. Oddly enough, we don't have a lot of questions here tonight, and not really sure why. Let me just take a look at some of the questions here. How did you do this last week, Hugh? Well, I actually did okay. I got hit pretty bad. I think it was one day. I think it was Thursday I got hit, but I ended up making up for it on Friday. Let me just take a look here. I don't have those stats handy. I did at the end of the day, I did okay on Thursday, but Friday, I was in a bit of a losing position on Thursday, but on Friday, I more than made up for it. As a matter of fact, the 2 minute tutorial talks about my Friday's trade. Now, I know what it was. I had to leave on Thursday. I couldn't watch the markets all day. I actually had some meetings and different things I had to go to on Thursday. So I wasn't there for when the market really dropped. So I didn't really trade a lot on Thursday, but on Friday, I made up for it. And I showed you last week what I did on Friday. It's part of my 2 minute tutorial. I made 2,000 plus on the Friday last week. And I showed you how I did it. In fact, last Friday, not this last Friday, but the Friday before, I got aggressive and I talked about that. So in the trading room, I followed the rules. and I took the following week's expiration. Okay, but then after the trading room, I got aggressive. I got into 0 day expirations, and I ramped it right up. Okay, I got really really aggressive. Now, a couple days ago, this Friday, I followed the rules through the whole thing because some people wrote to me. They said, "Well, you seem to be changing the rules on your own trading." I said, "Well, yeah, and as you get experience, you're able to do that. Okay, you'll be able to do that." Um, but but I thought that I would show them how I could trade, following the rules even after the trading room. And the reason we do that is because we're trying to minimize your risk as much as possible. Because a lot of new people are online, it's the whole training thing. But later on, as you get better, you'll be able to get a little more aggressive. But I thought, okay, I'm going to just do the next week's expiration. So on Friday, all my expirations were for the following Friday, okay? And these are real trades I did. Here they are. I used Schwab, Think or Swim, and you'll see, we'll quickly go over. They're all call options. The market was pressing to the upside for the various reasons. We determined that the market was likely going to go up. There was a lot of, we had a lot of fundamentals backed by a lot of technical indicators that said, looks like the market's going to go up. So we were pressing to the upside. And again, I'm not going to get into all the details as to why. Part of it was chart patterns and the reversion back to the prior day's close, filling of the gap. A lot of reasons. All right. And I think there might have been some good news as well from a fundamental standpoint. But here's what I did here. All right. And I'm going to go over the details and sort of summarize it afterwards. At 4 minutes, picked up what is this? 4 minutes. Picked up. You know what? I gotta fix this here. I hate it when this happens where hang on a second. I've got a space. Okay, there we go. Um, Invested $8,430. Made $220 in 4 minutes. Next trade in 14 minutes. Took it from 782 to 825 for a $430 gain. Next trade, which was, and they're all identified here, the times. This one came in at 10:15. I did this trade here. These are all on 10 contracts, except for the last trade. They're all on 10 contracts. I invested $7,910. Made $220. That was in 23 seconds, folks. 23 seconds. Trade number four picked up $150 in 4 minutes. Trade number five picked up $160 in 43 seconds, less than a minute. These are scalps. These are scalps. There's a lot of volatility. The stock was moving. The option was moving a lot. They're adding and taking away premium very quickly. So I would get in when our indicators suggested a great entry point. And this is the stuff that we teach you in the trading room. All right, here's an entry point. Here's our fundamental direction. And again, I don't want to give away the keys to the farm here, right? To the castle. So this is what we teach you. Trade number, what is this? Six. Trade number six picked up $240 in 3 minutes. Next one up, $120 in 4 minutes again. And this one here took it from 722 to 735 in 43 seconds for another $130. This is how you do it, folks. You just chip away at it, chip away, chip away, chip away, and it goes fast. The setups happen fast. The profits happen fast. You wait for the next setup, get in, take your profit, get in, wait, get in your another $140 here in 2 minutes. Another 2 minute trade here for another $140. And this last trade, I ended up, I put 20 contracts in, 20 contracts in, and this is wrong here. This is actually, this is okay. This is going to skew a little bit here. Okay, this is going to skew a little bit here. Okay, so this is going to throw the numbers off. I actually invested 13,000 in this trade here. Let me go back. So I actually had okay, so okay, this is gonna mess things up a little bit. 13,420 invested, okay. Um and Let me see here. Okay, let me get this back in here. Hang on a second. All right. So this is actually going to skew the numbers a little bit. All right. So because I had 20 contracts, actually my total invested there was actually 13,420. So that's going to mess up these numbers here. Okay. So these are a little off. They are a little off. But some of these numbers are going to be right. I'm going to show you what is actually correct. So 11 trades, average buy-in price. I'm going to have to, and again, this one here. Oh my God. Okay. Pardon me while I actually correct this. Okay. Hang on a second here. I want to correct this. This here is actually 13,420. All right. And so let me just do these numbers if you give me half a second here. Okay, I don't want to go and recalculate this, but the this price is going to be a little off. All right, so I'm gonna just it's going to be a little higher because I invested another what's that? What's that? 60 whatever it was. It's going to be a little bit higher, let's say, but you can't really add this in. So I'm just going to color this a little bit different here. I think you're getting the message though. I'm going to just do this. Then the average gain. These other numbers are going to be accurate. The average length of time is 7 minutes. The average gain is 185 or 2.5%. And my total gain was $2,030 less commission, and I was done in time for lunch. So this average buy price, because of this last trade, I neglected to add in the other 10 contracts that I had bought for what is it, 6,710 or whatever it is. So, but anyway, I think you get the drift. 7 minutes a trade, walking away with about 2.5% per trade. And by the end of by time for lunch, I think I finished at what, 10, 12, 10 minutes after 12 or something, right? Here it is right there, 10 minutes after 12. And just in time for lunch, right? So that's kind of how it works. Now, yes, I put a lot of money into each trade. My average investment was probably around, I don't know, I want to say, well, let me see, was it 6,000? 6,000? Yeah, I'll tell you in a second here. 13, 4, 20. Okay, so add another, let's see, 13, 4, 20 divided by 2. 670, divide that by 11. So add another $610 onto this, and I think you're going to have it right. 610 plus 3785. 40, 610 plus 7385. 7995. I think that's the number, 7995. 7995. I believe this is the more accurate number. We're going to put this up here. All right, that is the more accurate number. Okay, so you're putting a lot of money in, but you get it all back anyway. You get it all back anyway. All right, so this is the key. All right, this is the key. You're putting a lot of money in, and you're not in there for very long, but you've got the setup. You got the volatility. The market is moving. You're watching it. You're not even stepping away to go to the bathroom. Forget the coffee break. No coffee break. When you're in a trade, you're in there. But I mean, I'm in there for an average of 7 minutes. And a couple of these trades, two or three of these trades are for seconds. 43 seconds, 43 seconds, 23 seconds, 4 minutes. Let me see. The longest one was this last one for 42 minutes. And I think you'll also pick up a pattern here. Pick up a pattern, okay? 4 minutes, 14 minutes, 23 seconds, 4 minutes, 43 seconds, 3 minutes, take a look when you're later in the trade. Let's go back for a second. Later in the trade, right? 11, 12 o'clock, the movement isn't as great. That tells me that it's early in the day when you're getting the movements in these options, right? That's where you're making your money. By the time 11, 12 o'clock rolls around, you're waiting for those trades to come in a little bit longer, right? You're waiting for those trades to come a little bit longer. How come this thing isn't showing? There it is. There it is. That's that one right there. You're waiting there 42 minutes. I don't want to wait for 42 minutes. I want to be in and out of this thing a lot sooner. So I find that there's something to be said for what they called amateur hour. I used to laugh at that. I used to say, because I remember when I was part of other groups and stuff, and people would always say, "Oh, that's amateur hour." Or, what's that mean? They made it sound like it was a bad thing. Really? Oh, really? I didn't know that there was a professional hour and an amateur hour, but is that a bad thing? Because guess what? That's where I make my money. Guess what? That's where I make money. All right, listen, folks, we're gonna have a little contest here, right? Actually, you know what? Let's go back and ask some questions here. Let's go back to some questions. Forget the contest. We'll do the contest a little bit here. I want to get back to some more questions here before I do this. All right, let's go back to some questions. So, all right, what's the difference between the day trade spy signal and the pick of the day? All right, so the signal goes to your cell phone anytime in the morning. You don't have to be at your computer at 9:30. That's kind of the big one. You're looking for 5% gain there, and you're selling that at the end of the day. Pick of the day, however, all right, comes out at 9 o'clock in your inbox, and you're going to trade that at 9:30. So you have to be at your computer at 9:30. And you're going to put that up for sale for a 6% profit target. Even though we have to wrap it up at the end of the day, if need be, it's probably a good idea to hold that into the next day. Every now and then, it is going to actually deliver the profits at the next day. And those people who know how we trade, who've gone through the course in the trading room and whatnot, they feel confident in taking it the next day. Both the day trade by signal and the pick of the day are going to give you plenty of time to expiration. It's just a different way of calculating our gains on that. And usually the pick will give you the gains like right early within a few minutes. So that's kind of the way that is. So I think price wise, as the subscription goes, I think they're both the same. And again, I don't have the numbers on that. I don't want to sort of quote anything out of line on that. So another question here. How do you arrive at your wins, losses, numbers from which services? I'm not sure I understand the question. How do you arrive at your wins, losses? Okay, so probably referring to the wins, losses in the early part of this presentation where I had the charts up and I said something like 6 wins, no losses or whatever. So what we did there is those are the wins and the losses that John and I have essentially in the trading room, and that also includes the pick of the day and the signal. Okay. So those services are what we consider wins and losses. Any trades that John and I do outside of the trading room on our own, those are not included in those numbers. All right, those are not included. So these numbers that we post there, so we say 7 wins, 1 hold, or 8 wins, no losses, whatever. Those are the trades that we had publicly displayed and talked about and narrated. So, all right, another question here. When I join the trading room, do I still get the inner circle services as well? You need to subscribe to both. They are all separate services, Reggie. All right, so all of those services I said are actually separate. Now, that said, when you are in the trading room, we actually go over. Um, Let me go over this. We go over our. Well, we'll talk about the pick of the day after the fact because that is a separate subscription. But we have some of our strategies, like what we call the OMG strategy, which is short for out of the morning gate. That is a strategy we use in the trading room, and we'll talk about our bread and butter setups, our trades, our scalping strategy. Those are all done in the trading room, and we narrate that. But a lot of people will have they'll pick all of the subscription services. So they'll get into the morning pick of the day and the signal, and so they'll just keep adding to their wins that way. The inner circle is great because you'll be invited to our Wednesday night webinars as well. Plus, you're going to get that morning market analysis, which talks about our the setups for the day. Pretty important to know what's going on. taking a page from Wayne Gretzky's playbook. They call him the Great One. Best hockey player ever. Now, I think his record might be shattered. I'm pretty sure somebody broke his record, but for the very longest time, he was the top scoring hockey player ever, and by far. And somebody asked him once, a reporter, "How are you so good? What's your secret?" And not expecting an answer, he said, "No, no secret. I skate to where the puck is going, not where it is." Ah, how prophetic. I skate to where the puck is going, not where it is. And that's what we like to do. We like to anticipate, well, where's the market going to go, not where it is or where it has been. And I have to laugh because so many times, this happened again Friday, when we issue our predictions. We think the market's going to go up. And yet you look at the market and it's just dropped, another 5 or 6 points in pre-market. It's dropped the day before and it keeps dropping and dropping. And people email us and they say, "Hugh, are you sure? Look at the market. It's going down. It's going down." And I don't even think I respond too much anymore. If I have the time, I might answer them back, say, "Let's have this conversation later this afternoon." Um, But I've been saying things like it's not where it is that's important. It's where we look and see where it's going to go. And in the trading room, we'll talk about that. We'll say, okay, yeah, it has come down. It's come down a lot. It came down yesterday. It came down in pre-market. It's coming down. Oh my gosh, it's crashing and burning. But here's why I think it's going to go back up. And then I give my reasons. And then I'll talk about it and I'll map out my yellow brick road. This is what I call my yellow brick road. It's actually a chart pattern that I will map out to show where I think the market is going to go, and here's why. And it's uncanny how the market actually follows the yellow brick road, taking a page from the Wizard of Oz, right? And just follow the yellow brick road. So I might say, okay, well, I'm not going to get into it yet. I'm going to wait until it bounces up, comes back down, double bottoms, goes back up, breaks off the neckline, goes up. Then I'm going to get into it, and I'm going to get in for a scalp, another scalp, another scalp, and that's how I made $2,000. Now, yes, I traded almost what, $7,000, $8,000 or whatever it was on average, whatever. But you get it back when you sell. Don't let the numbers worry you. All right. When the market has stabilized as far as the volatility, and by that I mean it could be high volatility, that's fine. But as long as it's stabilized a little bit, you're going to get it back in a couple minutes. All right, so that's kind of where that's going. So, all right, so let me see here. Yeah, so they're all separate subscriptions. That's a long way of getting around that answer. So, another question here. At the start of each webinar, do you show Monday to Friday's volatility levels of low and high? How do you know it's so far ahead? Um, okay. Alex, okay, he's a smart guy. He's talking about Forex Factory and my Hawk Dove cheat sheet. I have a cheat sheet. Okay, so the question is, how do I know what the volatility is going to be like? I guess years of experience, I know what news drives the markets. News drives markets. It always will, always has. And so when I know when the anticipated news is coming up, I can actually pretty well predict how volatility is going to go. As an example, whenever President Trump speaks, the volatility goes up. So whenever you see Trump on the schedule, and a lot of times you don't see this until, just a little ways before, he might be scheduled on Forex Factory that day. Oh, Trump speaking that day. Oh, okay. Well, okay, volatility is going to be elevated. So just be careful because whenever he speaks, you see the market, it can jump up and down pretty good. So that's good to know that, right? Same with when Fed Chair Powell speaks, volatility is going to increase. That usually happens around 2:30 and into the afternoon on the Fed Reserve announcements, right? So when you see those days, probably a good idea to be out of the market because you're going to see some wild swings, or at least be in the market with the expectation that things can move pretty quick, both in your favor and against you. But on the other hand, too, it can move in both directions. So oftentimes, if it goes against you, just hold on. It could come back up too. So Yeah, that's how we determine volatility for the coming week. We check to see what news is coming up for the week in that regard. So another question here. Okay, so when I trade personally, do I use an account with margin or all cash with next day settling? So I have a margin account. So I do have a margin account, so I can trade in and out. And you know what? If you have any money at all, say in a 401k or something, put it in. And, let's say you're with Schwab, Think or Swim. Put at least 25K in with Schwab. You can keep it in money markets or however you want to invest it. They're an all-encompassing company. And so if you have that much you don't have to have 25,000 in your trading account. But if overall in their whole basket of services that they provide and products, you have at least 25K, you can go in and out as much as you want with your trading. And that enables you to day trade without having to worry about a pattern day trade rule. All right, so I use a margin account so I can do that. And that's the reason I have the available cash to go in and out. All right, because I do have that. Now, not everybody's going to have that. If you are under the pattern day trade rule, you can only trade as much cash as you have into the trading day because you have to wait until it settles the next day. So you are somewhat limited that way, but hopefully that's going to ramp up, over time, so that will enable you to have the 25K in your account so that you can day trade as much as you want. All right. Like I mentioned, even if you have some money in, other retirement savings accounts or 401ks or whatever, take it out of there, put it into the trading account, or if it's a Schwab, put it in there, whatever you want to have it in their investments, and then you'll be fine. It's not encumbered. So, all right, question here. Please comment on when you will exit the calls you were in that you said over the weekend. I am sitting in some calls from from last week, and I'm going to look at either repairing those or exiting them probably Monday or Tuesday. Wednesday for absolute sure. I don't want to be in those things overnight, Wednesday night. So I'm going to wait and see where the market is going. Let me just take a look real quick to see where we are. The futures, I just want to connect real quick. The futures are currently up 1750 for the S&P, 121 for the Nasdaq. So we're going to wait and see where the futures can change minute to minute, so we'll see what happens tomorrow. I suspect the market is probably going to go up tomorrow, just based on the news, and technical indicators, just from still recovering from Thursday's meltdown. So I think there's still going to be some upward pressure. A lot has to do with the big techs. Okay, they're what happens there is just going to be it's gonna have an influence over the S&P 500. So, all right, another question here. What's your success rates between day trade spy signal and the pick on the day? Pick of the day. I don't have a current number on that, Robert. Last I checked, we're pushing into 90% success rate on those, and we're probably not far off on that. Okay, another question here. I don't use a cell phone. I used to be a trade of the day, got stuff on a computer. Do I need to change the strategy that I bought? No, no, no. You don't have to. You don't have to use a cell phone. If you're at your computer, you can trade wherever you are. We just like to say that the day trade spy signal. If you're out driving your kids to school or whatever you're doing at that time or whatever you're doing, if you're we have a lot of people. So a lot of people are on the road. They're working, whatever they're doing. Um, they would take the signal because they have it at their disposal, right? But if you're in front of your computer, absolutely go for it. You do get the email as well, not just a cell phone, but you get the email as well. So please list your office number or office number. Okay, so somebody wants our office number. Okay, let me get you that, and I should get you that number. I will give you the office number if you want to phone Eagle Financial. It says it right here. 570-567-0426. If you want to write that down. Do I have a chat box? I think I have a chat box. Let me see if I can maybe send that to everybody. Eagle number, phone. What did I say? 570-567-0426. I will send that to everybody. It is in your chat box. That is Eagle's telephone number if you want to give them a call. There is a gentleman, I think his name is Grant. I think he will take your call on that. Yeah, you can talk to him about any of our products and services. So he'll give you the best rate as well. I don't really like to go through like customer service departments at all, but I like to talk to somebody directly as well. So, question, do I ever sell options? No. Okay, so our strategy calls for buying first and then selling. Buy first, then sell. I don't like to go naked or or spreads. I used to do all that stuff before, and too complicated, too confusing, too high risk. I found the reward wasn't there. I like to just get in, make some money, get out. All right. So yeah, that's how I like to do it. Da, 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 da. So another question here. I was part of the master class. That's how I remember those two sources. I'm just curious, as the days about the pick of the day does not go out. And the days, okay, so the days that the pick of the day does not go out, that's because the volatility is different than other days, high volatility. Okay, so every now and then, very rare. I can count on one hand the number of times in a year this happens, but the trade will be at no trade day. Now, don't feel slighted that we didn't give you a pick. Be thankful that we saved your butt from getting into a bad trade. Okay. So when we send out a no trade day, that means hold off at 9:30 when the market goes up. Look at your volatility. It's probably sky high, and it's a very high risk trade. Because if you buy, so the pick of the day is anchored in time. What we're saying is that the market goes up, it goes down, but if you buy at a certain time, it's going to go in one direction or the other, whatever. Uh, but if the volatility is way high, you could be getting to a very expensive option. And we don't want you to do that because what happens is the volatility will drop a little bit later on after the market opens. And we would hate to see you be in a trade having bought very high and now you can't get out of it. So when we say a no trade day, that means just at that 9:30 mark, just hold on. Hold on, wait until the volatility comes down to some sort of a more normal level and then get into it. And if you're in our trading room, you'll know exactly what we're talking about. So another reason to be in the trading room because we have like this live streaming thing as to what's happening. So all right, another question here. You don't maintain a trade tracker of all your trades that we might refer to for wins and losses. No, so we do have we track our own spreadsheets, but we don't publicly display all that. There's a reason for that too. The reason is, and I used to do that a long time ago, and people would, they would love to criticize or they would jump on it thinking that every trade I do is a great trade or, and sometimes I would experiment with different things back in those days. And they would just blindly follow you. And I think it's not a good idea to blindly follow anybody. All right. And a lot of times, we're gonna try different things. I'll go on high risk trades. I'll have the odd loser. And conversely, when I have great trades, that doesn't mean you're gonna have a great trade. Okay. Everybody's different. We like to teach you and you can follow along in the trading room perfectly, fine, because there we're gonna do safer trades. We narrate everything. If you want to follow along in that regard, that's the place to do it. All right. We don't want a lot of bookkeeping after the fact because after the trading room, if I want to get in and out, in and out, in and out, I don't want to have to log all of that and present it and update websites and all that stuff. You'll get our trades in the inner circle updated daily updates. That's who we display what we actually did in the trading room, and that's really what we do there. So. All right, more questions before we kind of get into the. Actually, you know what? I'm going to go into the. Okay, so here's what we're going to do. I want you to all in the contest, and I'm going to get back to some more questions, but in the meantime, I'm going to give you a chance here. Please put a number in the questions box, 1 to 100, all right? And then we're going to have our random number generator pick out the number closest to the number and get this thing here. There we go. And the winner's going to get an ebook. The ebook is going to be called Triumphs and Tragedies. And let me just, and I will send that to the person closest to the number in the random number generator. So, more questions here. Okay. I just look at the options volatility when the market opens, trying to understand the reason of why it's so bad that day. Okay, so why was the reason bad that day whenever okay, got it. So sometimes when you get this high volatility, that means something is going on in the market, and traders are protecting themselves. They're charging a lot of money for the options, right? Market makers they're protected because they don't know really where the market's going to go. Are we really going to tank more? Are we going to go up? And so you're going to see high prices for the options. That's to cover themselves. And the funny thing is, when you're looking at the volume on those high volatility days, it's remarkable at how low the volumes are. And that's how I can tell. So then when I see volume still in those trades, those high volatility trades, I see those are a lot of amateurs. Those are retail traders. They don't know any better. So I see volume kicking in when the volatility is really high, thinking, "Oh my gosh, you guys are suckers. You got sucked into this thing. You're going to lose your money." If I see, 500 contracts having traded by 9:32 or something, and the volatility is screaming high, I think, oh my gosh, you guys got sucked in. You are in for it. You're so in for it. Anyway, so that's the reason. So yeah, be careful about that. Volatility is it can be dangerous in this game, right? Okay, so all right, folks, everybody get your numbers in? Give me your numbers, folks. It's 9:07. When my clock kicks over to 9:08, I am going to call that, and then I'm going to bring in the number generator, and we are going to pick a new number. Now, when I bring in this number generator, there's a number here already. Here it is. I got to find it here first. Where is it? Where is it? Where is it? The number. Here's the number generator. You got it right here. There's a number here. It's the number is 34. This is not the number, folks. This is not the number. Oh, where did I go? Okay, this thing is gonna freeze on me, and I'm gonna. Oh my gosh, where did it keeps falling off here? Hold on a second here. I gotta find it again. I just lost it. Here it is right here. All right, that is not the number. Now I'm going to, okay, it's 9:08. No more number generators. Irving is the last to come out with his numbers. So now I'm going to click this little box here. I think it's that one there. Now I'm going to hit the button. The number is 22, folks. The number is 22. Let's go. Okay, I said 1 to 100, and here's somebody wrote in 107. Gotta love it. Okay, now I gotta go through the list here. Oh my gosh, there's so many people here. 22. All right, here. Let me just, where's the list here? Okay, here. All right, let's see. Arnold came in at 16. He's six. Oh, Rainey. Rainey is 25. Oh, somebody beat Rainey here. Oh, Matthew's at 24. Sorry, Rainey. Matthew G is at 24. Okay, we might have a winner with Matthew. He's only two off. Okay. What did I say? 22. We have Gene. All right, Gene came in at 21. Okay, so if it's a tie, you both get the ebook. Kent came in at 23. So we have one up, one down. The only way we can beat that is if somebody came in at Douglas, we got a winner. Douglas A came in at 22. We have a winner there. Let's see if there's anybody else that came in at 22. Let me see here. Okay, nope. Douglas A got the 22. Congratulations, Douglas. You are the winner, buddy. You are the winner, and you will be sent the ebook shortly. Triumphs and Tragedies. Douglas, question for you. Did you win already? I'm going to give you a choice. You can have either Triumphs and Tragedies or Tips, Tricks, and Traps. Let me know in the questions box. Which one do you want? Triumphs and Tragedies or Tips, Tricks, and Traps? Double T or triple T, I will give you your choice. And with that, I am going to remove this guy here. And thank you for joining me here. I'm just waiting for his response. Well, you know what? I'm not going to hold you up. Punch it up in the questions box here, Douglas. Tips, tricks, and traps, and or triumphs and tragedies. In the meantime, don't forget to sign up and join us, folks. That's what it's all about here. So, all right, been a pleasure. All right, this session is also recorded. It will be available online soon. Have a good night, everybody.
Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing.